Hi, this is Zach with the Bulletin Board Heroes here at Zach's Traders Cafe, the weekend edition for Sunday, the 2nd of November. Starting off with the FTSE 100, which is still enjoying its alleged Sakir Starmer rally to record highs. Here you can see that we're actually just pulled back to the top of the old June trend channel there, the black channel there, 97.20, or around that area, just where we closed on Friday, and above 97.20, looking for 98.30 by the end of this month. On the downside, worst case that is expected is the old 95.77 peak from the early part of last month. But ideally, I suppose we stay on the right side of the 96.50 zone, which was midweek, early week support for this market. The DAX is next, and here it's was giving and has been giving the impression of sliding to the downside. We've lost the RSI 50 level to leave that at 44, and we're also struggling just below the falling 50-day line. So this was a normal market. You'd be looking for at least the downside here to be the floor of the April rising trend channel, 23,800, and probably even the 200-day line there at 23,300. But at least for the time being, looking for the channel to be maintained, and still hoping that there could be a break of 24,400 recent resistance to take us up to, say, 26,000 by the end of the year. But very slow price action, remarkably slow actually, for that market. Next up is the Dow, and here you can see that we have backed off just from near to where we were hoping this market would go, so 48,300, top of a rising May 2024 price channel. Quite an achievement to get up there, especially given the lay of the land and tariffs, etc. But at the moment, at least while we're above the old initial October resistance around 47,000, looking for 48,300 as a minimum by the end of this month. The cryptos are next, and first up is Bitcoin, which has bounced for the second time, rather surprisingly, at the top of that falling trend channel, and is currently nestled at the 200-day line, or just above it at 109. Range here between the 50-day line, the 200-day line rather, and recent October resistance at 116. Early and end of day close through 116 and back above RSI 50 versus 46 at the moment would really change the picture of further consolidation at the lower levels of the range, below the 50-day line and above the floor of that channel there from back in March 107. Ethereum is next, and here I suppose the main battle is to try and get back above the 4,000 level. The problem here is that the April support line there has been broken. You could argue that it's slightly less steep, so maybe we've just hit it once and that's it. So 37.50, and above 37.50 we could go back to the 50-day line there at 41.65. The problem here is that the RSI remains below neutral 50, and we've got an RSI resistance line there as well, which can be quite a pesky barrier to progress. And certainly while we're below that line there at RSI 54, you'd probably be thinking that this market is a sell into strength rather than a buy on dips. In terms of the downside, the 200-day line and August support there towards 33.80, the favored destination if we do break down or have a mini breakdown. Gold is next, and here I suppose the name of the game is trying to work out whether we've had our pullback. We've managed to bounce so far above a rising 50-day line there at 38.09, which is healthy. Bounced, given it, basically an RSI 50 rebound as well, so that's looking good. But we've already been looking for at least the 41.70 area, which was resistance on the way down, while we're above the 3900 area. That's probably the fairest summary of the situation there. On to the stocks and amazing AI is next. Here, a bit of recovery actually going against the grain of its peers, or its Bitcoin treasury peers. Here, it's interesting that we've got the shares in a rising trend channel base, the floor of the channel there at 1 pence. We've got the 50-day line rising as well, and that's at 1.25 pence. Just need an end of day close above that 50-day line to give us maybe a move back up to the top of the range. Obviously, people waiting for the company to execute its first trade. You can see that we've had recent resistance towards 1.25 pence, so the 50-day line, and a gap just above it up to 1.4 pence, the initial work to be done there ahead of a move maybe towards 2 pence by the end of this month. This stage, early and end of day close well below 0.9, really delaying the upside or recovery scenario for that stock. African Pioneer looking as good as gold at the moment, and here you can see that we've had a nice rebound, a bear trap rebound from below the rising 50-day line. Looking at the top of the broadening triangle there from this time last year at 1.8 pence by the end of this month. Nice little breakout for Atlas Metals, which was foretold or forecast here. We broke out of that triangle there, which was identified at 35 pence. And in fact, we've accelerated to the upside. Initial target here, 70 pence by the end of this month, which was basically a retest of last October's resistance. You can see that even on the pullback, the RSI remained above neutral 50, and we've had many bounces above that, so looking very strong indeed. Onto Fragrant Prosperity, where there were a flurry of TR1s during the week. Here you can see that we've broken out of that falling trend channel around the 0.82 level, above that, looking for the top of the triangle, and post-June resistance of 1.4 pence by the end of this month. Next up is Genedrive, where there's prospect of a shareholder loan. Here we've got the minimum now at the 200-day line, 1.31 pence, and I suppose you look further back, you'd be looking for 1.8 pence as a best case scenario target by the end of next month, while we remain above recent broken resistance around the 0.85 pence level. Bit of revival in Hamak strategy at the end of the week. Obviously, we've had rather a long pullback from the highs from the beginning of August. Bear trap rebound from below the July and October support there around 1.35 pence, and above that looking for at least the 200-day line around 1.8 pence. Best case, I suppose, by the end of the year, or I suppose at the end of the month, maybe up to 3 pence in the 50-day line. But early days yet. The main thing is we stay above that 1.35 pence zone. On to the last two. The first one is Valereum, and here shares all but hitting the initial target here, just shy. But I think if you look, actually no, we did actually hit it. 7 3/4 pence at the top of that falling trend channel. End of day close above that, or higher than where we closed on Friday. The next close higher, and we're looking for up to 14 pence, which is the upper parallel of that falling trend channel. But a very nice turnaround there, and one which the charting did suggest to us. Finishing off with Xeros, and here we've had gaps to the upside, not necessarily unfilled, but top of the channel here from back in August last year up to 2 3/4 pence. And we're looking for that while we're above recent broken resistance at 1.8 pence. Hopefully that will happen in the first part of November. That's it for me today. More updates tomorrow.